What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our market open live stream on this fine Thursday morning. We are seeing a lot of consolidation, as we've already discussed in our market update. And of course, Tesla reported its numbers yesterday after the bell with, of course, a beat on revenue, a beat on revenue, miss on EPS. And of course, it's slightly down about 3.8, almost 4% at the moment right now. So we're trading down to $422 with QQQs down about 27 basis points, accelerating a little bit of that sell-off from yesterday. Like I said, we did see a nice little bounce around 3 p.m. mark closing into the power hour. The Nasdaq did rally over 1%. S&P 500 also did recover, but we were, of course, down at one point much more than where we closed. Volatility back over 19, so it's up a little bit over 3%, with crude oil getting a nice little breakout here, over 3% higher, breaking out to over $60 a barrel, as we are seeing some supply constraints between the US and Russia as well. So hope you all are doing great. Welcome on board for our market open live stream here. Any questions, just let me know. I'm more than happy to help. And yeah, so this is what the pre-market looks like. We do have, of course, Tesla selling off quite a bit. Oscar back under $20, down over 5.5%. Enphase, we got ASML down over 1% each. We got SMH down almost 90 basis points with CoreWeave, Broadcom, SoFi, Nvidia, Hood, Meta, QQQs, Iron. Everything is selling off, with exceptions to these stocks right here, which is Amazon slightly higher, Vertex Pharmaceutical, Google up about 20-30 basis points. We got Opendoor, Joby, BMNR up over 1.2%. Then we got, of course, Nebius, BITX, Ethereum ETF on the back of crypto is pushing higher a little bit pre-market as well. But of course, Rigetti Computing up over 9.9%, and Nebius is up over 1.5%. I mean, of course, a lot of these high growth momentum stocks took a beating yesterday, with Oklo, Bitfarms, Rigetti Computing, Navitas, ASD Space, BMNR, BITX, TMQ, MicroStrategy, Oscar. Everything was down, with the exception of course, few companies here, Grab, CCJ, as well as Kinross Gold Corporation, but everything else got absolutely demolished yesterday. So we're seeing a little bit of that recovery back higher. So welcome. Good morning, everybody. Thank you so much for joining. Shout out to all of you guys. Lucky, Diogo, Chef and Tel, the real disciples. We got Jay, Ramya, Admin, Beauty of New Zealand. Thank you so much for joining. Mike, Ramya, once again, thanks for joining here. Good morning. Can you take a look at BURU? We'll take a look at that here. What are you buying today? So again, we're going to analyze the markets. We're going to take a look at some stocks, what opportunities present themselves. Either it's going to be selling puts or buying shares straight up. I did pick up Iron. I've been picking up SoFi. I've been picking up Oscar. So a lot of companies have been on my radar for quite some time. Keep buying LAES. Thank me later. We'll take a look at that stock here as well. I got to your thoughts on Enphase and InMode. Shall I DC, as I'm down both on by 40%? So, one of the videos that I've actually sent out in our Patreon. And by the way, this entire Stocks and Personal Finance is available for all the members. And I highly encourage everyone to watch as many videos as possible, because all these videos are available for free. These are from within your subscription. Like, if you do subscribe, this is all included in your subscription. You can literally access it. You can download spreadsheets and PDF documents. There's like a wealth of information here. And for Beauty of New Zealand, for your question, I really would encourage you to watch this video, okay? Avoid this costly investing mistake, because as I've mentioned before in this video, and I've many times before, ideally when you are investing long-term, you should never be down more than 25% on a stock. If you are, then it really requires everyone to revisit the story, the analysis, the thesis. Why is it in the first place that you invested in that stock? Is that thesis still intact? If not, what do you need to do? Do you need to exit out of that position? Or if the thesis is still intact, if it's a still high quality company, you are going to be dollar cost averaging, you are going to be buying, and as a result, that loss should never be more than 25%. you should always be thinking about either dollar cost averaging, accumulating more, or getting rid of that position, because it cannot be dead weight on your portfolio. You cannot have dead weight just kind of dragging you down in your performance. If you're just sitting there doing nothing, you're not revisiting the story, the thesis is not there, you're just kind of hoping for the price to come back, well, then it's going to drag down your performance long term. It's much better to take action, be a little bit more intentful, to actually take action, take initiative, whether it's a stock that you want to hold, sell, and get out of it, revisit something else, essentially, obviously deploy capital into something else. That's very, very important. Every action that you take as an investor has to be very, very, it has to be initiative, right? You have to take initiative. You have to be more intentional, with your decisions. So that's what I've got for you. Just revisit the stock. I can share my thoughts on those two companies, but definitely revisit the positions and, of course, the story behind those two companies, Enphase and InPost, and whether that fits your portfolio. If not, then it's just dead weight. You're better off just looking into something else. Okay. Okay, can you cover Trade Desk? Yes, Trade Desk is also been on my radar. We'll talk about that here in just a minute as well. He said my name. Love this channel. Perfect. Yeah, welcome everybody. I really appreciate that. Do you have a source of live market news? Like when we see the VIX spike, I find myself running around in panic trying to understand what is going on, happening, causing the spike. Yeah, so I mean, one of the best places where you can find information, of course, is our channel, right? So our Discord, like I am always sharing, and we're setting up a news bot in our Discord as well. So that is what it's going to do is real-time updates on what is going on, and we're also working on building through certain keywords and certain posts on Twitter, X. It's going to be following certain individuals on X, all public information. As soon as they post, it's going to directly come to our Discord feed as an announcement, as well as all other updates from major news sources. And all of that are going to be headlines posted on our Discord. So that is something that we are building. And eventually it's going to make its way over to the website as well. By the end of this year, we're going to completely transform our Discord as well as our website, because we are going through a major overhaul of the entire design, the data that's going to be available, the entire dashboard, as well as the Discord bot, with technical analysis, news, alerts, all of that. So my team and I have been really busy with working on that, and we're going to make some announcements. December 1st is when the redesign will be complete for the new website project, and then, of course, the bots are going to be released at the end of this year. So basically, at the end of December, we're going to have a news bot as well as the technical analysis. We're just kind of fine-tuning some of those things as well, which I think is going to be a game changer. It's going to keep us on the pulse of the market pretty much every single second, minute. It can get chaotic. It can get pretty noisy, so you can mute that channel as well. But we are going to have real-time updates, alerts, things that are super important to the market. And of course, if volatility does spike, we're going to have that information literally on our fingertips. But of course, for now, you can always tune in. I will be giving updates manually as much as I can. Okay, so I'm going to cover some stocks here. Trade Desk, SoFi, Rigetti Computing, which ETFs you like best in 2026. So, that is more of a very, very subjective question, because it depends on what it is that you're looking for, right? Everyone's got a different objective, but this right here is my entire shopping list. You can literally download this spreadsheet. So if I click on this, you will be able to go to this spreadsheet right here, and this is all available, right? Again, included in the subscription, ETF shopping list. You can download this. A lot of people, I'm surprised, don't know this already, but this is an entire video which you can watch. 52 ETFs broken down by growth, value, dividends, growth plus income, precious metals, gold, silver, crypto, specific themes, specific sectors, all of that. And I've put in a lot of time and effort into building this, because it goes over issuer, assets under management, liquidity, reputation, volume, everything, right? Expense ratios, holding concentration, geographic concentration, everything. Download this spreadsheet and you have your answer of 52 top-notch best ETFs broken down by different objectives that you have. So definitely recommend that for us, for you, or Chuck for you. Okay, Walt, how do you relate the argument you just addressed to your position at PayPal? So yeah, PayPal was dead weight for me. I was down, and these are, again, ongoing lessons, right? So yes, I was down a little bit over 40%. My thesis was dead, and then eventually I was out of that position, right? So I reinvested that capital into something else, right? So PayPal, of course, has not really gone anywhere. So for me, it was a stock that I, not so much that I didn't believe long-term fundamentals are still strong. I mean, the company is still growing revenues and earnings and cash flow. It's just the stock doesn't move, and it hasn't moved and it hasn't performed in such a long time. So for me, this was a company that was a little bit of a dead weight, so wanted to get rid of it and reinvest that capital into something else. So that was my overall thought process because I was able to find better opportunities elsewhere. Okay, how does the volume look like? Volume's been pretty low in this market, to be very honest. That's one of the reasons why, I mentioned in my Tuesday's update that we were going to be expecting some kind of a pullback or rug pull or whatever, and even mentioned that in the Discord as well, that we're in this kangaroo market because we're not really going anywhere. And this happens from time to time where you essentially go sideways. This was a little bit of a kangaroo market, right? 4 or 5 trading weeks where the markets are not really going anywhere, and then they finally break out. And right now we're seeing something similar, right? The markets are once again are not really going anywhere. There's range bound. Are we going to get a breakout or a breakdown? Of course, that's when we can react. We can't react in a range bound pattern here, waiting for this resolution. We have to wait and then evaluate the situation. If and when we do see volatility spike back higher over 27, 28, 29, like we did last Friday, was a very strong VIX spike, right? 29, sent out all the orders. We're down 35% from those levels. And of course, a lot of the market has obviously pushed up. I think this week we might be slightly green or flat. Yeah, 26 basis points higher for NASDAQ, and S&P is up about 0.5% right now. So we're just up marginally. Okay, let's see here. Is Nebius still overvalued after the dip? Okay, so let's take a look at some stocks here. Let's start with LAES, and then we can also take a look at BURU. Nuburu. Okay, quite an interesting name. Penny stock, 47 million. I'm going to skip past it. You guys know the rules. You guys know the threshold that we look for. At least a couple 100 million market cap, has to have decent volume, and then also does not have to be a penny stock, right? So we're looking at least $4 or $5 as a minimum. So this right here, we got Seals Q Corporation, just under $1 billion, barely meets that threshold, but we'll let it slide, 540. And when it comes to the fundamentals, it doesn't look like, so if it's reporting semi-annually, I'm going to assume it is not a U.S. publicly traded company. I'm not just going to assume, I'm going to actually flat out say that because semi-annuals are only coming out of Europe. So let's see where they're based out of. So the company is based out of Switzerland. So they're headquartered in Switzerland. Interesting, but we are expanding those losses. There has been a pretty substantial rally here over the last 4 to 5 weeks, 200%. I'll put this on my radar, but we've got a resistance up to 944, 945, and I would say a support right around 218 to 220 for this stock here. So you can add it to the watch list here, but just be mindful of the losses that just keep piling up for the stock. Rigetti Computing. Again, I've talked about this before. If you come over to my watch list on the hot stocks, right? So if you come over to this one that I've already shared with everybody on Discord, most companies in this watch list are not profitable. In fact, a lot of them are not even generating any revenues, right? So you can see, like, none of them actually have a PE ratio. We can count exactly how many of them actually do have a PE ratio, which is just a handful. Kinross, we got MicroStrategy, dLocal, Mercado Libre, which is a high conviction stock, Iron, we got Lyft, however you say that, CCJ, and then we got Grab. That's it. A lot of the other ones, not profitable. Some don't even have revenues at the moment. And so Rigetti Computing, since this is in question, I mean, just take a look. On an annual basis, you've got losses expansion, revenue is little to nothing. So I just be very, very careful. I've mentioned this before. Risk management is very important when you are trading these momentum stocks because you can get caught up in a day like right now where they're down anywhere from 7, 8, 9, 12, 13, 15% in one single day. And that's not even the worst part. The worst part is that can potentially continue even further if this were to get worse, and of course if the bubble starts to deflate. So just be very, very careful with a lot of these companies. There's not really much of the fundamentals to analyze right now for these stocks. Okay, would you buy Nebius and NVTS? I mean, again, guys, I feel like the quality of the stocks has really gone down. That's what really happens during this momentum and this very, very euphoric market. And I totally get that because now we're really asking questions about Lucid. Now we're really asking questions about Lucid and Nebius and Rigetti Computing. Like just think about it, right? From a long-term investing perspective, can we not find anything better than Lucid or Nebius? Like, seriously. The quality of these stocks that we're talking about has really gone down. It's crazy. I mean, what are we talking about here? Come on, guys. We together picked Palantir. We picked, we talked about NVIDIA, right? We talked about AMD. We've talked about a lot of these companies over the years, 4 years, 5 years ago. No, I'm not willing to settle for Lucid here. So I need better. I need better stocks. We got to bring up the quality a little bit. My high conviction, I shared in my other video, Axon, Mercado Libre, Team, which is Atlassian, huge potential. DoorDash, just on the verge of profitability. In fact, is almost turning the corner. Fantastic uptrending channel here. I would definitely be watching this stock very carefully. And again, as you can see, it's now finally turning the corner. Very strong balance sheets for these companies. Mercado Libre, in my opinion, should most certainly be in a lot of watch lists. Again, bouncing off of that higher low, expanding market share. We got growing revenues, very good profitability here. What else did we talk about? We talked about Technoglass, another profitable company. Net debt is negative, so more cash than debt. Total assets exceed over total liabilities by 8 times. So those are the fundamental high quality businesses, right? I mean, that's what we're focusing on, okay? So yeah, so Nebius, I mean, I've got to take a look into that more, but I'm just referring to this idea that a lot of companies, again, have fundamentally speaking, right? I mean, we're talking about little to no revenues here, on an annual basis, 117 million, like a huge reduction in revenues, for this company. Of course, gross profits, negative 33 million. I mean, if your gross profit is negative, you know what other company had negative gross profits, which eventually went bankrupt, which was very popular on YouTube? Which was the other company that was incredibly, I would be very impressed if you remember this stock. I would be very impressed if you remember this stock. If there was one company that was very popular on YouTube that eventually went bankrupt with negative gross profits. Negative. So we're talking the company which the cost of actually making the product is more than the product revenue itself. So if you've got negative gross profits, that's already, it kills the entire thesis right there. Tattooed Chef. Yes, it was TTCF, right? So yes, it was Tattooed Chef because it was the more they scale, the more money they lose, right? So that is already going to kill the thesis right there if your gross profits are negative, right? Gross profit is quite literally your revenue minus your cost of goods sold, right? So actual cost of producing your product or service. And a lot of companies, that we've looked at over the years have been in software, in technology. They've had very high gross margins, right? So it's much easier to become profitable over time if you've got at least 70, 80% gross profit margins, because then you've really got to control the operating costs, right? Operational costs is SG&A, R&D, which is a research development, sales and general administrative expenses like wages, marketing, salaries, all that. And the companies that have operating leverage is even better, right? So your revenue is growing, but your operating cost is fixed or not going up at the same rate as your revenue growth. That's where operating leverage comes in. Operating leverage is nothing but the delta of the change in revenue versus the delta of the change in operating cost. And if that number is over 1, the company's got operating leverage. But yeah, a lot of these, be very careful. That's all we have to say. If the company's got pretty strong fundamentals, got good defensible moat, good management, then we are, looking at a great idea, Otherwise, it could be a momentum trade. It could be a good trading stock, but long term, you just have to be super careful, because for every one Palantir that is successful, there's over 1,000 that nobody hears about them, right? Nobody talks about them because they're not there. Okay, all right, so now that I've got that out of the way, let's come back. Let's talk about Beyond Meat. Oh my God. Beyond Meat, really? I'm about to quit this live stream. If I... we should have a separate meme stock live stream. How about that? We'll do a separate live Hertz. We'll talk about Hertz also. AMC. I love it. I love it. Okay, so let's come back to... Good morning, MoneyVest community. Dalton, welcome. Let's take a look here. Yeah. Potato and eggs prices jumped. What's my opinion on Pfizer? FISERV. Okay, let's take a look. FI. All right. So yeah, we got good revenue growth here. Consistently profitable. Let's take a look at what's going on the valuation side. We got 21 times earnings, 3 times sales. Now trading at a pretty reasonable level here. Yeah, consistently, well, expectations are at least for the EPS and for the revenue grow from 880 to as much as 1570. So that's about 100% growth over the next 4 to 5 years. Revenue is expected to go from 19 billion to 24 billion. That is also pretty strong. And let's take a look at balance sheet here. $28 billion worth of debt. And what are we talking about in terms of margins? Return on assets is pretty low. 12% return on equity, invested capital 6%, gross margins are pretty good, 61%, operating margins at 30%, net margin at 18% for the company. So yeah, I mean, not bad. This is pretty strong fundamentals. It's just obviously the net debt significantly higher. And then let's take a look at the share buyback also. I mean, this is a stock I would definitely put it on my watch list. Fundamentally seems to be very well positioned in terms of what I'm seeing so far. And on a monthly time frame since 2008, stocks up 1,900, 3,000%. Obviously, this has been a massive decline here, 48, 49%. That's what we're talking about. That's what I'm going to add to the watch list. Thank you for mentioning this. I might already have this on the main watch list, but we'll just add it again. Okay, let's take a look here. Yeah, TTD. Let's take a look at Trade Desk. I have been looking into this stock as well because it's been consolidating sideways after a huge run-up. It's practically at the same level as it was 5 years ago. And we've got growing revenues. Profitability also seems to be expanding back higher. I think the balance sheet is also pretty good. Yep, so we've got way more cash than debt on the balance sheet. I think the earnings contraction in 2025 is what's really hurting the stock right now, because this is going to be a massive decline in earnings, more than 50% for Trade Desk, and revenue still expected to grow, but earnings are coming down. But it's really post 2027 is when the earnings will start accelerating back up over $1.95 to $2 and beyond for this stock. So this is a stock that would be on a back burner, but something to keep in mind for accumulation, because it could eventually start to move back higher as we start to see those earnings growth come back in for this stock. So Trade Desk is one of those companies to put on your watch list. You can see the massive volume drop during this time. So after it kind of peaked here for 5 years, it's essentially been trading sideways and it hasn't gone anywhere. And take a look at that volume, right? It's just essentially dropped off, but it's now starting to pick back up here. So if we get that recovery and a breakout over 125, then yes, I would be looking into the stock even right now, given the fact that it's been trading sideways. And of course, we are at a $39, $40 support, and that is going to be an area of accumulation there. Okay, let's take a look at SMCI very quickly. Super Microcomputers. This has also been in the news quite a bit. And on a weekly time frame, we've got this as a higher high and higher low pattern. So got a very nice consistent uptrend here for SMCI. And this is going to be that support level to watch. And yes, we did see a pretty wild drop after a parabolic run-up. Supermicro was part of the shopping list. It's been a high conviction back in the day, I would say 2023, 2024. But then, of course, with all the accounting missteps and whatever happened internally with the company, it's still up from its lows, 200%. And I would say like this right here is the overall uptrend within which it continues to trade with a support level around $46, $47. So Pratik, team, I already covered earlier in one of my videos. I talked about this, I think yesterday. I went over like 6 or 7 stocks that I really like with some high conviction. So definitely do check out that video. Grab also, Milan, we have talked about it very briefly. Chef Intel, sorry, every comment except mine. Where is yours? Yeah, Trade Desk I just went over, so hopefully that was your suggestion there. And let's take a look here at Grab. Milan, like I said, we've already covered that in our previous updates, but we got a little bit of a pullback coming in. 650, 660 was the resistance here, and we're starting to see a little bit of a pullback once again. So 430 is going to be that support to watch for Grab. Let's see. Trending dividends, ETF, JEPQ, is it a good investment? So let's see. JP Morgan, we got equity premium incomes. 10% is the dividend yield. But as I've said, with any ETF that you want to analyze, just go to this website, type in what that ETF is, and then you can literally do a full-blown analysis on this ETF, right? Or whatever ETF that you want to look at. You can even download the PDF available for free. You can just have to click on that link, and there you go. So you can look at the issuer, JP Morgan, very, very strong. You can look at the expense ratio. When was it actually started? 2022. And then also the performance data, top 5 holdings, everything is going to be available. And then you can make a decision whether it's actually worth investing in it or not. These are the holdings, and I believe what it's going to be doing is just running since it's an equity premium, I'm going to assume it's going to be focused on running a covered call strategy or something. Let's see, NASDAQ 100, while pursuing lower volatility. The fund may also invest 20% of the portfolio equity link notes here. In managing the fund, a proprietary investment approach is utilized wherein data insights such as fundamental research, company fundamentals, alternative data, and public disclosures. But 10% dividend yield, I'm assuming there's definitely options involved in order to actually get the 10.5% through these holdings that they have, right? So, so in that case, again, it is, if it fits your criteria for growth plus income, then I have no problem with an ETF run by JP Morgan with an expense ratio of 35 basis points, which again is quite reasonable compared to what's out there. Okay, let's take a look at a few more before we come back to the markets here. Could you touch on BITX and the general strategy? Why not just buy Bitcoin, Steven? So I think, with Bitcoin 2x ETF, it's really a play on leverage. That's really what it is. Because for me, obviously if Bitcoin goes to $1 million, right, which is where the next huge price target is, that is a 10x growth potential for Bitcoin, right? But for BITX, that's going to be twice as more. And so I treat crypto, and more specifically Bitcoin, as a high risk, high reward opportunity where it's like a really volatile asset where I'm only investing amount that I'm willing to lose, right? That's how I treat crypto. And that's why the exposure that I have in crypto has to be a lot less, because it's an asymmetric bet, because it's an opportunity where it could either go down to 0 or it could 10x or 20x over the long time frames. So that's an investment amount that I'm comfortable with either going to 0 or, increasing 10x, 20x. And so if Bitcoin is the actual asset that you want to own, that's totally fine. If BITX is something that you want to have a little bit more leverage, a bit more kicker, that is also totally fine. So it's one of those things that it's the exception to the rule for me personally, where I'm comfortable just keeping it for a little bit longer than usual and having a 12% dividend yield payout, each year, right? So plus dividend every month, yes. So dividend's pretty strong for that. I don't know how to trade when you are in Singapore or Dubai, where there is no capital gains tax. Well, you just simply trade by buying and selling. That's how you trade. You buy a stock and then you sell a stock. Yeah, I mean there's no difference. You just do the same thing that you're doing now, but there's just no capital gains tax. That's all it is. Using VIX or your index, any thoughts? Yeah, I mean, you can trade just like how you would trade normally. So, but there's no capital gains tax. But yeah, so in terms of tax residency, again, I don't want to get too much into that because I'm not a tax professional, but other than the US, right? The US is one of the only countries that taxes you globally, regardless of where you live and where you work and where you go. Every other country, if you are a citizen of that country, then of course you've got the opportunity of having a physical presence test where if you are living in another jurisdiction for more than 183 days, then you become a tax resident of that country. And so then if that place ends up being, let's say, Singapore or Dubai, then yes, you can most certainly take advantage of the benefits that those countries have to offer in terms of trading, investing, business, all the other things. So, okay, let's take a look at Netflix and Raytheon, and then we will come back to Insight and a few others, and then we'll take a look at the markets here. Okay, so Netflix did drop quite aggressively. Yesterday down over 10%. And next support is going to be at 1,100 down to 1,061. I would not touch Netflix right now until at least if it gets to under 1,000 to some better, more interesting levels. So yeah, that's going to be that support right now at 1,100 all the way down to 1,060. And anything under $1,000 is where I would start looking into it more. Raytheon, let's take a look at RTX. So, Raytheon has been on the watch list for quite some time. Higher highs and higher lows. Very nice uptrend. I think it pays a small dividend, 1.5%. And we've got a bit of a gap to fill here. After the earnings, it blew up more. And I would put down a strong support right around this 152, 153 levels for Raytheon as well. And of course, we got a bit of a gap to fill here. And inside this uptrend, you could even argue that the next target or the uptrend is going to be closer to this 184, 185 level for Raytheon. Insight Corporation, we've got a lot of consolidation here over the last 10 years, 11 years. It hasn't really gone anywhere, which is crazy. And support level is going to stay put right around $52, $53. Resistance all the way up to 142, 143 for Insight. There might be one more resistance right around here at 105. So again, a lot of consolidation, months and months of consolidation here for Insight. Okay, let's take a look at the markets here. So we are sitting at just under 19 on volatility. Markets continue to be a little bit more flat. They are slightly down. QQQ's 20 basis points. SPY is essentially flat, and Tesla down over 3%. Nvidia down 0.5%. You got SoFi down over 26 basis points as well, with Bitcoin recovering back over 109,000, and Ether is just over 3,800 at the moment here. So that's where we are. Crude oil trading at just under $62. We were talking about this as a very, very strong supporter on the $56 range. Nice little bounce back higher. 2 back-to-back very green days, up 4% today, up another 3% yesterday. And so the next resistance is going to be closer to $66. So that's going to be that level to watch for crude. Netflix stock split. I think it will benefit them over the long term because the options activity, like a lot of people are getting into options, right? A lot of people are either running the wheel strategy or trading options for income or straight up buying options or leaps and so on and so forth. So it certainly helps if you've got more options activity on a stock, and it becomes better for the market makers also to provide liquidity, and there's going to be more activity, more transactions, more traders involved if it's more accessible. Because at $1,100, I mean, we're talking one call is going to cost about $100,000 to get to 100 shares for this stock here. Same as Mercado Libre. I was kind of mentioning this yesterday. I was like, okay, it's a high conviction stock for me. My goal would be to sell at least one covered call on Mercado Libre because the premiums are insane, right? We're talking about $70-$80 in premiums, even higher. I mean, weekly premiums, you can generate $2,000. And so, always kind of thinking about it in terms of, okay, 100 shares of Mercado Libre right now is going to cost me about $200,000. And if I were to sell, let's say, next Friday's call with a 20 delta, which if you come down a little bit further, is going to be a strike of around 23.10, is going to give you $1,400, right? If you go with 25 delta, a little bit higher, you're looking at 22.70. And it's going to be $2,350, right? So $2,350, that's in 8 days, about a week here. And if you do that, let's say even 3 times a month, that's $6,000. What kind of investment property out there in the entire U.S. you can buy for $200,000 that's going to pay you $6,000 worth of rent, net, after taxes, insurance, property management, everything? Probably nothing out there. And this is where options becomes really, really lucrative, right? From an annualized perspective, because you can make a list of high quality companies, stocks that you are very confident in. And you can simply either buy and hold, and in your long-term portfolio, that's totally fine. But in your options portfolio, you can actually juice up those premiums and get a little bit of a higher return. And so that becomes a very lucrative thing. And that's really what I've been looking at. I was like, okay, 100 shares, good, 4, 5, 6,000 income weekly coming in just from one stock, right? That's the whole point of scaling an options portfolio is, when you do it at scale, selling options for AMD and Hood, they're juicy as heck. Yeah. I'm looking at June 2026, strike 27. So let's swap half of your portfolio with Mercado Libre. My options portfolio right now is mostly NVIDIA. And I've been thinking about just adding a little bit of Mercado Libre, switching out of NVIDIA. But I don't know. I want to start slow. I want to start maybe because it's not so like the convictions don't flip so quickly that you just completely sell out of NVIDIA and go all in on Mercado Libre, because then it becomes, okay, it's like a completely new thing. You just got to slowly and steadily build up to it. And so I'm going to start accumulating shares, maybe a couple of shares, here and there, and then go from there. So once you get up to 100 shares, then yeah, it's incredible. Yeah, Oscar's bleeding a little bit, Robinson. I saw that. SoFi cash secured put, looking at June 2026, strike 27. So I would be careful going that far out, unless, of course, you're rolling. And, the thing is with puts, you don't want to roll. With calls, you most certainly want to roll. Because, and again, we were talking about this in our Discord as well not too long ago. You want to treat shares, when you are running the option strategy, you want to treat the shares as your real estate and your premiums as your rent. The premiums is the rent that you collect for the shares that you own. So why would you want to give up the shares, right? Why would you want to give up the house? You want to keep collecting the rent, right? While the house appreciates, while the stock continues to go up. And on the put side, if you are putting your collateral, up for that cash secured put, the goal is to actually own the house, not to avoid owning the house, because once you own it, then you can start collecting rent, which is start selling calls. But then, of course, stock selection, strike selection, deltas, timing, a lot of those factors come into play. I'm just really oversimplifying it right now, but a lot of those factors, once applied well, can be a very lucrative strategy. And, that's really what we focus on in the Discord, right? Mostly selling options, generating income, and also appreciation. For all the Discord members, I just posted the Tesla analysis, including numbers from the earnings report plus some strategic takeaways. Yes, definitely do check that out. Dave here doing a lot of homework on Tesla. posting some absolutely incredible analysis on our Discord. So definitely do check that out here, as Tesla gives us a very nice opening down almost 4%. But, for Tesla investors who've been in this stock long enough, it just doesn't feel right if Tesla goes up on earnings. It's tradition. It has to go down. That's when we actually feel good. If it goes up, but we feel weird, it's like, what happened? Tesla's doing good? Elon's making good on his promises? No, that can't. Now is the time to get out. It's when Elon is just giving us the most grandest, most unrealistic, most unachievable promises, and the stock tanks. That's when we know, okay, we're still doing good. We're still doing good. We still have belief, and we can rely on our hopium. So, all right. So market's going to open in about a couple minutes here, and volatility continues to fluctuate around 1920s here. Crypto just getting a little bit of a bounce back higher, but it's really been low volume, right? Low volume for equities, low volume for crypto. I think precious metals definitely took a beating. Gold starting to recover back higher. So again, in our shorter time frames, we talked about the lower high and the lower low pattern here for gold. And same thing for silver as well, right? So this is the lower high and lower low pattern. We're starting to see a nice little round back higher. But I would keep a close eye at $50.26 per ounce. I think that's where it could start to get rejected again, and then start to rotate back down. And it ripped. Yeah, sometimes it does that, right? Sometimes it does rip. BITX is great for CSPs. A lot of stocks, right? A lot of high beta names are going to be good for cash secured puts and covered calls. And what I'm also working on is kind of interesting is an options screener, which I think would be very helpful. It's gonna, it's quite an interesting calculation that we're working to. It's gonna show you on a relative basis what cash secured puts are yielding the best ROI as a combination of both delta as well as return on collateral. So lots of things in the works, you guys. The reason I have been extremely busy is because of all the things that are just coming out. And I think 2026, we're going to have a lot of new launches, features, calculators, screeners, as well as bots that I think are going to be super helpful. It's going to completely transform everything for the community. Okay, everyone. Thank you so much for joining. Markets are going to be opening in about a minute here. Looks like we're going to have a flat open with Tesla down over 4% now, NVIDIA flat. You got SoFi up over 44 basis points. And I think a lot of Magnificent 7 stocks are also going to be slightly green, some higher, some lower. But thank you so much for joining. I'm going to jump into our Discord, share some insights there and alerts if I see any opportunities. But thanks so much for joining. I appreciate it. Again, link's going to be down below if you're interested in joining, being a part of our MoneyVest community. The additional 30% annual discount is available until the end of this month. So another 7-8 days left if you want to take advantage of that. Here we go. Markets are open. All the best today. Have a great Thursday. We'll do this again tomorrow for inflation, a little bit of an earlier live stream to cover the CPI numbers, the delayed CPI numbers. Thanks again. Take care. See you all in the next video.